The Nebraska Motor Vehicle Industry Licensing Board requires all individuals and businesses working in the motor vehicle industry to be licensed to buy and sell vehicles. Part of this licensing process is purchasing a surety bond, also called an auto dealer bond. If this is your first time getting licensed, the idea or concept of an auto dealer bond is probably completely new to you. And that's why in this short video, I'm going to help you understand what a surety bond or auto dealer bond is, why an auto dealer bond is required, how to purchase your auto dealer bond and not overpay, plus helpful resources to make getting your application submitted easy. Before we get started, hit that like button for me. It's gonna help YouTube put this video in front of other Nebraska dealers so that they too can understand the auto dealer bond requirement and learn how to pay less for it and get it done faster. I appreciate it. Let's quickly cover the 6 license classifications. Nebraska licenses 6 types of dealer and vehicle occupations. These are vehicle dealer, auction dealer, wrecker or salvage dealer, finance company, manufacturer, distributor, and branch license, motor vehicle or trailer manufacturer or distributor representative license. Only vehicle dealers and auction dealers are required to purchase an auto dealer surety bond. And this brings us to, what is an auto dealer surety bond? An auto dealer bond is a type of surety bond, and a surety bond is a form of insurance that you're required to purchase, and it acts as a guarantee or a personal guarantee that you will do 3 things. Follow Nebraska's vehicle dealer industry laws, rules, and regulations. Conduct business with your customers using fair and ethical business practices. Pay all sales tax on vehicles and merchandise sold through the dealership. So, if an auto dealer bond is a type of insurance, what does an auto dealer bond protect against? Think about this. The licensing process is a set of standards that individuals and businesses must meet in order to legally do business in the state. And as you know, some of these standards include things such as registering your business with the state, taking any required examinations if it's applicable, purchasing the required minimum amount of insurance, plus setting up your dealership to make sure that it can pass inspection. Even with these licensing standards in place, every year there will always be a small handful of dealerships that will purposely and financially harm their customers in order to make more money or refuse or just fail to pay sales taxes in order to keep more money. Examples of these acts of fraudulent acts can include things such as failing to transfer a title, selling vehicles with no title or misrepresenting the title, misrepresenting vehicle information like mileage, manufacturer year, or accident history, stealing from customer deposits, not paying sales tax on sold vehicles. If a dealer or dealership is found guilty of any of these types of actions, the customer and or the state in regards to failing to pay sales taxes can make a claim against the bond for financial reimbursement, but only if the claim itself is valid and only up to the amount of the bond. And this brings us to, what is the bond amount? The bond amount is set by the licensing board. For vehicle dealers, the bond amount is $50,000. If you actually open up a supplemental or second location in a separate county for that dealership, the bond amount, or you have to get another bond with a bond amount of $50,000. If you have another second dealership in the same county, the one $50,000 bond or the original will cover that location as well. Auction dealers have a bond amount of $100,000. Now remember, the bond amount is just the maximum amount of financial protection afforded to customers and the state in the case of failing to pay sales tax on vehicles sold. The price to purchase this bond is a small fraction of this bond amount. So this brings us to, how much does an auto dealer bond cost? Similar to traditional insurance that you're more used to, the cost of an auto dealer bond is determined by a rate quoted from a surety. And a surety is just the insurance company that underwrites the surety bond. Here's the thing though, every surety does their own independent analysis and assessment of the applicant, typically using factors such as the personal credit of the owner or owners, the vehicle industry experience and business history, any prior bond claims if an owner has previously been licensed with a past claim. This rate multiplied by the bond amount or your bond amount is the price that you're going to pay. But remember, the sureties do their own independent analysis, which means the rates that they quote are going to vary. We have seen some of our customers' rates come back that are percentage points difference, which means we've helped our customers save hundreds of dollars. And this is why it's really important to use a specialized surety agency like Surety Bonds Direct when purchasing your auto dealer bond. How to not overpay for your auto dealer bond. So working with a specialized surety agency like Surety Bonds Direct is the best and fastest way to purchase your auto dealer bond. And think about this. If you were to save hundreds of dollars, this is money that you can put towards application fees, examination fees, background and fingerprint fees, costs of getting your dealership set up so it can pass inspection. So it makes sense to pay as little as possible, especially when it's so easy. Let me show you the process. All you have to do is first request a quote online, or you can call a bond specialist. The minute your request is taken, the bond specialist will immediately begin hitting the phones, and talking to our network of A-rated sureties to find you the lowest possible rate, which means the lowest possible price. This process only takes about 1 business day, usually a lot less. And the great part about it is it costs you nothing to have our bond specialist price shop for you. Even better, once you get the lowest possible price, there is 0 obligation to actually purchase it. So it makes perfect sense to get this pricing. That way you have the information you need to be able to save as much money as possible and get this licensing process done. Let's look at some price examples of the $50,000 bond. I want you to see for yourself how big of an effect a different rate has on the price that you end up paying. The rates that I'm going to use in these examples are from really good to about average. A 0.5% rate has a price of $250. A 1% rate has a price of $500. And a 2.5% rate has a price of $1,250. Example rates are great, but it's so easy to go get your own pricing. So just go request your quote now so you know exactly what you're going to owe. Once you agree to a price, purchasing the bond is as easy as purchasing anything online. You just fill out an online order form and you're done. Our issuing department will be notified and they'll get to work right away on issuing your bond. How long does it take to get your bond? Our issuing team will prepare the correct bond form with all the correct information about your business, the necessary signatures, seals, and the power of attorney so that's guaranteed to be accepted or your money back. The Nebraska Licensing Board accepts a copy of the original bond, which means that we can email it to you, speeding the process up even more. Once you get your bond, submit it with your application packet, and you're pretty much done. We guarantee that the bond itself will be accepted or your money back. How to keep your dealer bond active. As long as you're in business, you need an active bond on file. All surety bonds or auto dealer bonds have a bond term. In Nebraska, there's actually a hard cutoff date or expiration date of December 31st each year. So when you purchase your bond, it's likely to be prorated to that date. The effective date is the date that you're going to choose when you purchase your bond, and that's when the bond actually becomes active. All Nebraska auto dealer bonds are continuous. This means after you submit a copy of your bond with your application packet, that bond will stay on file and active as long as you pay the renewal premium each year during the renewal process. And this is another reason why working with a specialized surety agency like Surety Bonds Direct is really smart, because we manage the process for you. Your bond specialist will contact you 30 to 45 days in advance to let you know that your expiration date's approaching. They'll have the renewal premium already calculated to make it easy to renew. You don't have to do anything extra. I hope you understand the auto dealer bond process. As you can tell, once you do understand it, it's really not that complicated, and the process itself goes fast. It's 1 to 2 business days at most. So go request your quote now. Get the pricing. Quotes are good for 30 days. And once you have that, you can then make the appropriate decision for your application process. If you have any questions, ask in the comments below. I'll personally answer you. And if I don't know the answer, I'm going to make sure I get you the answer. Again, thanks for watching, and I hope you got some value out of this video. If you did, hit that like button for me. It's going to help YouTube put this video in front of other Nebraska dealers so that they too can, again, understand the auto dealer bond and its process, save money, and get it done quickly. Thank you for watching. Always be sure to come back and check in the description for any updates on bond amounts or dates if they change in the future.